you're watching this video, then there's probably a good chance that you own properties within the UK. As we know, Rachel Reeves has hiked up the amount of tax that you pay on personally owned investment properties. I've been helping landlords and property investors for the last 5+ years incorporate their portfolios and helping them move their properties from personally owned and transitioning into a limited company by paying little to no tax. The reason I'm mentioning this is because it's one of the only solutions that is still available for you to legitimately pay less tax on your portfolio. So as we can see, Reeves has raised the taxes in personal name from 20% up to 22% if you're a basic rate taxpayer, 40% up to 42% if you're a higher rate taxpayer, and 45% to 47% if you're an additional rate taxpayer. Now, actually, the problem is a lot worse than it looks. And the reason for that is because of how you get taxed on personally owned properties in your own name. So in this example, I'm going to explain to you how you end up actually paying more than 47% tax, and actually it's more like 86% tax on the profits going forward. So in this example, we have a profit of £10,000 before mortgage interest. The mortgage interest actually paid out of the bank is £5,000, but as we know, HMRC only give you relief for 20%. So when we're looking at the tax bill and we're calculating the tax bill, what happens is we get the £10,000 profit, and then we can only take off £1,000, not the £5,000. If you're in a limited company, you could take the £5,000 off, hence why a lot of people are doing that. But in this example, if you've got properties in your own name, what ends up happening is you're paying profit on this £9,000, which is an inflated profit number. So you're then, in this example, we've got the 47% rate, which is the new additional taxpayer rate. You would pay tax of £4,230. So here we have the tax payable that we've just calculated. And this figure here, £5,000, is the real profit. If you're operating via a limited company, this is the amount of profit that you'd be paying corporation tax on, obviously at a lower rate of 19 to 25%. Unfortunately, in this case, we've got properties in our own name. What happens then is the effective rate of tax actually ends up being 84.6%. So if you do have properties in your own name, you seriously need to look at whether it's worth incorporating your portfolio or not.